As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Welcome to Stocksnipertrading. In today's tutorial, we will be going over the falling wedge pattern. A wedge pattern is another technical reversal pattern marked by converging trend lines on a price chart. These two trend lines are drawn to illustrate the highs and the lows of the price and shows that they are either rising or falling and differing rates, giving the appearance of a wedge as the lines approach a convergence. These chart patterns are useful indicators of market exhaustion and a potential reversal in price action. In this illustration, we can see that we are in a downtrend with a big bearish momentum coming down. Eventually, we will reach a level of support where we start to bounce off of it as buyers come into the market, and they push the price to the resistance, and we make lower highs where selling momentum continues pushing it down, and we continue to make lower lows and lower highs. But the trend lines, the bottom support trend line and the top resistance trend line are converging together. And as the selling volume starts to decrease, nearing the apex, we should see a bullish momentum coming in at a support level and will eventually break out of this bearish momentum and create a bullish reversal. A falling wedge is a bullish reversal pattern and is the exact opposite of a rising wedge, which is a bearish reversal pattern. And a falling wedge is seen where price action has been falling over time, and a wedge is developed as the trend makes its final downward move. As the trend lines converge towards the apex and the bearish volume decreases, buyers step in and the reversal is made as they increase the buying volume. In the illustration, we can see the bearish downtrend with price action coming down, and it bounces off our support line as buyers enter. But however, we reach a level of resistance where we're making a lower high on added selling volume, where they push the price back down to the support, making a new lower low, and buying momentum continues, but they are making lower highs. But we can see now that we have converging trend lines, and the bearish momentum and volume is decreasing as sellers are getting exhausted. Eventually, the price will reach a level of support where we will get increased buyers entering the market, and they will increase the buying volume, where eventually we will get the breakout at the apex, and we will have the bullish reversal from the bearish downtrend. This is an example of our falling wedge, which is a bullish reversal pattern. This is from our TradingView charts, and this particular example is the EURUSD pair, and we are on the 60-minute time frame where each individual candlestick is 1 hour to form. So we can clearly see we are in a bearish downtrend as price action is coming down and decreasing. And B is our falling wedge with our converging trend lines. C is our converging support trend line where we see buyers entering the market. D is our converging resistance trend line where we continue to make lower highs. And eventually, as this selling volume starts to decrease, we can see that the buyers have established a support level and start entering the market. As the buying volume increases and the bearish volume decreases, we should see a breakout at the apex of the converging trend lines. E, we see our bullish breakout on high bullish volume, and we completely reverse the downtrend to a new uptrend, and we continue this upward momentum as long as price action continues to make higher highs and higher lows. Let's take a look at this example. So we can see that we're getting bearish candles here, and they are large bearish candles continuing this bearish downtrend. And now we start to see our first spinning top candle. This candlestick shows some indecision between the buyers and sellers, and we got some buying momentum. However, there is still some bearish momentum left over where they're still pushing the price down. And it reaches a level of resistance where we get some sellers entering the market and pushing the price down, and the price is making lower highs. And now we can start to see that we have converging trend lines. We get a bullish candle here, but it does not break our trend line, and it continues to go down as sellers continue to push the price down. We start to see some buying momentum with the lower wicks. And we start to see that the bearish candles are starting to lose some momentum. And we also see that the bullish candles have lower wicks, which represents buyers coming into the market. Once the buyers establish a nice support level, we should see the buying volume increase and overtake the selling volume. When this happens, we get a bullish breakout at the apex of the converging trend lines, and we break the downtrend, and now we have complete the reversal to the bullish uptrend. This uptrend will continue as long as buying momentum increases and we make higher highs and higher lows. A quick recap. The falling wedge is a bullish reversal pattern. It is characterized by its converging trend lines. We have a breakout towards the apex, and we can see that it has bearish volume is decreasing due to exhaustion, and we can see bullish volume increasing as more buyers enter the market at a support level. We hope you enjoyed this tutorial on the falling wedge, and in our next tutorials we will introduce technical chart indicators.